Okay, hi everyone. So today we're going to go through this question and answer, which we usually receive from clients. But I just received it recently. Um, when clients come to us, right, they usually come to us with a question or statement like, I want to do something. Okay, then what do I have to do this thing in Singapore? So in most cases, it would be, they want to maybe operate a retail shop selling maybe clothes, okay, men's and women's clothing. Okay, so then after that, right, they would ask us, what do we have to do to go about doing this business in Singapore? Okay, so essentially, clients may want to come and start a business in Singapore, and then after they ask us to simple question answer, what are the things to consider when starting a business. Okay, so the first thing to consider, right, is always the business structure. There's always a sole proprietor or a company. These are the two more common business structures. Obviously, there are still things like a LLP or partnership, but that one essentially they are extensions of sole proprietorship or companies. Okay, but the sole proprietorship, right, what it essentially means, right, it's like a hawker or a property agent, insurance agent, or a taxi driver. So you are trading in your own name. If let's say I'm a tuition teacher and I go to a person's house, then after that I make I get the parents to pay me for providing tuition to their children. Then if I'm trading in my own name, which means that I say, oh, you pay to me, then essentially that's a sole proprietor. Okay, but then a company, right, is if it's something private limited. Okay, but then a company is a separate legal entity. What it means is that the company, right, is like giving birth to another person. Okay, so you need to consider whether you want to go down the company route. Okay, essentially I think the most important consideration between running a business as a sole proprietor or a company, right, are the liabilities portion. Okay, because all the other things, right, I can control, but liabilities I cannot control. So for me, right, as a very prudent individual, I always gear towards thinking about my liabilities before I think about my profits. So the liabilities portion, right, in if let's say you are running a cafe as a sole proprietor, then somebody comes to the cafe, slips and falls, then that individual wants to sue the cafe, right, then you'll be suing the sole proprietorship. Okay, so essentially, right, the sole proprietorship is you yourself. So your if let's say you got any private property or you got monies in your bank, then if they sue the business, which is the cafe, which is the sole proprietor, then essentially they are suing you. So that means that the business owner's own assets, right, will be accessible by the creditor. So if somebody successfully sues the business, right, then he or she can lay claim to your personal monies, your personal private property as well. So normally I'll tell my clients, right, especially if you're doing something, right, you're doing a business whereby you deal with a lot of clients, a lot of customers, then there is a lot of ways, right, in which things might go wrong. Then please incorporate a company because it sort of limits your liability. The liability, right, of the company is what the company has. So if let's say the company, maybe the shareholders invested maybe 100,000 in the company, then put it on the company bank account, then the company spends some money doing its operations and whatnot, then eventually come back to the company, right, and then the company's bank account has maybe 80,000, then something goes wrong, only this 80,000 can be touched. If let's say the company shareholder, which is the owner of the company, has a private property, right, the creditor cannot lay claim to the private property. uh, and yeah, there must be quite serious things where then after that the director or the shareholder will be liable. But in this instance, right, there isn't. So if you want to limit your liabilities, right, please incorporate a company. A company also is easier to raise funds because the shareholders, right, or the directors can say, well, we've run out of money, so what we need to do is that we need to issue new shares, and in exchange, right, they will sell the shares to maybe the new shareholder, then the new shareholder will put monies in exchange for shares. So it is because of this ability to sell shares. Therefore, the company, right, has the ability to raise funds. But if let's say I'm the taxi driver, right, and I'm just registered saying, just registered my sole proprietorship saying, oh, I'm a sole proprietor, then there's no way I can raise money. I cannot ask money from other people. I can only use the money which I make. Okay, so that's the difference. Okay, and then the regulatory requirements, right? Essentially, right, the sole proprietorship, all you need to do is to renew your business registration every year. I think now there are options for you to register in multiple renew in multiple years. I think it's 1 or 3 years. So if you update maybe multiple years at a go, right, then you will be able to renew your business registration for a longer time. But in all essence, right, the regulatory requirements for a company is a lot higher, in the sense that you have to do your financial statements, then you got to go and file your annual returns. So in exchange for the protected liability portion and the ability to raise funds, right, I always tell my clients, right, that actually the regulatory requirements are they're not onerous, although they are tedious. Okay, so this is something that to take note. Of course, if your business is not so big as per se, and you are okay with a sole proprietorship, then you will be able to save on a lot of needing to file regulatory file things that the regulatory authorities require. Okay, so after you've decided on the business structure, right, you gotta deal with the operation. So maybe you've already incorporated the company or you've registered the business. Then after that, you would have to consider rental. So if let's say you're running a shop, then you would consider the rental space in a commercial retail outlet. Then if you're doing something whereby maybe it's just for office space, right, then you have to rent a place whereby it's zoned to be office. Okay, so a lot of mistakes, right, where clients stumble upon, right, is that they need an office and then they rent a B1 space. So a B1 space is a commercial space. You're not supposed to use B1 space as an office, unless the office is to support the maybe the warehousing portion of the business. Okay, so in this case, right, rental would be the primary consideration. Now, of course, nowadays there are a lot of people who work from home. Then after, what they do is that they register under the home office scheme. If not, then they put their registered office, right, in with their COPSEC like us like that. Then we actually help to collect your mails, provide registered office services to them. So next, you open your bank account, which is your DBS, UOB or OCBC. There are digital banks as well. So you got to set up a bank account for your operations. Finally, next there's employment. So you got to hire people. What you can do, right, is that you got to register your corp pass. Then after that, you got to register the company's corp pass or the business's corp pass. Then you can open a CPF account. Then from the CPF account, right, you will make CPF contributions, which is a form of forced savings, right, to the CPF members' CPF accounts as well. So you need to keep track of your accounts. That means that, like, you got to show the government, I made this amount of money, therefore I need to pay this amount of tax. So these are things that you will need to take note of, keeping track of your accounts. So if you're unable to keep track of your accounts, right, it cannot be just an Excel spreadsheet, money in and money out. Then what you can do is that you can outsource your accounting work to people like us. So like for us, a lot of companies do outsource their accounting and HR work to us. Okay, so next, right, we got to talk about the legal portion of the business. So if you have agreements with clients and business partners, usually you get service agreements drafted. Usually, I would tell my clients that if you are more prudent, then you will get a lawyer to maybe draft these documents. Then after that, you will need your employment contracts to be drafted as well, for people who you're going to hire. Or let's say you yourself, you're a director of the company which is hired by the company, then you will have to draft up an employment contract as well. Then the shareholders agreement, right, is the agreement between the various shareholders. So in this case, right, maybe certain shareholders behavior is actually regulated by the shareholders agreements. So these are things that the shareholders have agreed upon, and then maybe maybe there's a preemptive right if one party wants to sell their shares. Yeah, so these are the terms that would be included in the shareholders agreement. Okay, next, right, it will be funding. So you got a loan or equity. So if you're a business, right, you're a sole proprietor, then you would only have the loan. You can't issue equity because equity is shares. So when you want to expand, right, the only way to do it is either you go and borrow money or you issue new shares in exchange for money. Okay, so you borrow money, right, means you take a loan. Then after that, you issue new shares, means the directors of the company would get subscribers to the new shares, and in exchange for these shares, right, so the company sells shares to these new shareholders. Then these new shareholders would obviously pay for the shares, so that's where the company will get money. Then of course there are some government grants or subsidies, right, which go along well with the company or the sole proprietorship. So if you are in business, right, you might be eligible for some government grants or subsidies. This is something that you need to take note of. If you need assistance with this, then you can come to us. Okay, finally, right, then it's about closure. So for sole proprietorship, right, it's just a business. So what you do is that you essentially just register the business, and then if you forget to you renew your registration, then the registration will lapse. Or if you don't want to do anymore, you can just close off the business, or you can just wait for the registration to lapse. Okay, so but for a company, right, it's a bit more complicated in the sense that it would be the outstanding debts, right, need to be cleared. Then the outstanding statutory requirements, like maybe filing with IRAS, ACRA, or CPF board. So without the outstanding debts being cleared, right, and the outstanding statutory requirements being cleared, right, the company cannot be closed. Okay, so that's all from me. See you at the next video. If you got any queries, right, you can look at our resource page on singaporesecretaryservices.com. Raffles Corporate Services is our corporate site, and if you have any queries, you can email us at hello@rafflescorporateservices.com. Okay, so if you I hope we have given you a clear enough picture of what are the things to take note of if you want to start a business in Singapore. But if you want a more in-depth like discussion over your plans, you can always contact us. Then we can schedule a call with you to advise you accordingly. Okay, so that's all from me, and I'll see you in the next video.